When a new president gets elected, and especially when it's a close race that results in a change of party, the first few weeks post-election often show which sectors might excel under the new administration. Deemed by many investors the Trump trade 4 years ago, and now the Biden trade, you might think that the trajectory of these sectors would coincide closely with the president's policy goals. But they don't. They didn't 4 years ago, and they don't today. In 2016, as Donald Trump surprised most of the world with his win, the U.S. stock market plummeted overnight before recovering and finishing the next day positive. This was evidence of a quick digestion of what had just happened. Trades were unwound, and stock sectors started pricing in a Trump rather than Clinton administration. In addition, Republicans captured both the House and Senate, making policy changes more likely. Some sector-specific themes emerged, like a much-promised infrastructure bill, relaxed regulation and financial conditions for banks, and friendlier oil drilling regulations. Now, keep in mind the sector swings post-election had as much to do with unwinding the Clinton trade as it did the Trump trade. The market was positioned for tech to lead the way, and the immediate market volatility after Trump's election was only exacerbated by this recalibration away from the Clinton trade. And what happened between Trump's election and his inauguration? Financials, industrials, materials, and energy soared. Yet, this Trump trade was not indefinite. Not one of those sectors were in the top 4 performers from then until now. When presenting this information to my colleagues at Glassman Wealth, they immediately dove into the reasoning. Well, oil prices plummeted, low interest rates propelled growth stocks into the stratosphere. There will always be reasons. Trying to guess the George W. Bush trade, forever called the W trade, in his first term 9/11, or second term financial crisis would have proven nearly impossible. In Trump's case, the divided Congress post-midterms had as much to do with the Trump trade fail as the pandemic. Is the Biden trade already irrelevant? Much like the Clinton trade leading up to 2016 election, the Biden trade was leading the market as he led in the polls. A blue wave scenario needed to be accounted for, and investors bid up shares in industrials and renewable energy. Here's one of the larger: the alternative energy exchange traded funds leading up to the election. If there still is a Biden trade, it needs to factor in a likely Republican Senate. This means that sweeping reforms in climate regulation and taxes on big tech are less likely to receive congressional approval. While I believe a divided Congress reduces the impact of what a Biden trade might mean, the reemergence trade will be the one to watch. We remember life pre-COVID. We are still in this new normal for now, but the market is forward-looking. You may not love value stocks.